All right. Well, to help make sense of what Ben Bernanke said, we are joined now by Michael Feroli, the chief U.S. economist at JPMorgan Chase. He's a former Federal Reserve economist and, based on data compiled by Bloomberg, is one of the most accurate forecasters of the economy, what we call a Bloomberg best. And also joining us now is Bloomberg's economics editor, Michael McKee, also one of our Bloomberg best. That's right. Thank you very much. Nicely done. Gentlemen, thanks so much for coming on. Mike Feroli, talk to me about what Ben Bernanke said today. He said that the Fed is going to have to take what he called necessary steps to aid this nation's fiscal recovery. What types of steps are needed?
So I think when he was talking about the necessary steps, he was talking about coordination with European authorities to make sure this the fiscal crisis doesn't spill over into U.S. financial markets. Do
they want advice from us? Given our economic situation, are the Europeans looking to us for advice?
I think at some level, certainly the ECB and Fed are always in communication, and I think the relationship is collegial, so I think advice is always welcome.
Talk to me then specifically, Michael McKee, about the necessary steps that Mr. Bernanke was hinting about.
Well, what they're talking about is not so much advice as it is money. The Fed has made its swap lines available to the Europeans. If there is a demand for dollars that's not being met, that can be had from the Federal Reserve. At this point, it's very little demand, very little need for it, but it's a confidence-building measure. And Bernanke is essentially saying that we're going to take what steps we need to take to make sure that there's no spillover into the United States. But at the same time, he said it doesn't look like there's going to be any anyway.
Well, Mike, do you buy that argument? I'm curious, because there has been all this debate about contagion. Is it going to be? Is it not going to be? We have different countries in Europe that seem to be experiencing more problems. Do you think the Fed's going to be successful?
I mean, to be sure, Bernanke said there would be some modest impact on U.S. growth, and he also said they're watching for the possibility that it could be worse than that. And I think that's about right so far, right, which is that the dollar is a little higher. We do have some important offsets that Bernanke mentioned, lower oil prices, lower interest rates. And so you add that all up. And right now, I think I would agree with that the impact looks modest. But, of course, there is that tail risk that we have to worry about, and that which Bernanke said they are watching.
Well, both of you, as you well know, the chairman not well known for shocking people with his comments. Was there anything there today that surprised you at all?
They go out of their way not to surprise people and signal in advance when they're going to make a major pronouncement. Really, there was nothing new in this, and that may be the news out of this, that the Fed's view of the economy has been consistent for some time. We heard it in his April 27th testimony, the last time he talked about the economy. We heard it from them in the most recent minutes of their last meeting, and we heard it from Bernanke on Monday night. The economy is growing at a slow pace, but it is growing, not enough to bring down unemployment. And until that happens, we probably aren't going to need to see many changes in monetary policy.
But then also he did say on Monday night, he said that the Fed will raise rates from a record low before the economy returns to full employment.
Well, full employment, I mean, there's a debate. It could be 6% now. Yeah. It could be 5%, but we're still a long way away from that anyway.
All right. Michael McKee, Mike Feroli.